Business nature of the selected company. 1.1 Spritzer Berhad. For our selected company, now we choose Spritzer Berhad. Spritzer was found in 1989 by Lim Kok Chiong and it is a publicly listed company in Malaysia. Spritzer is also known as the largest producer of silica-rich mineral water in the country. The waters come from an annotation aquifers under 400-acre rainforest, and it is a naturally filtered through rock and sandstone, which make it rich in silica. In terms of products, Spritzer has several brands such as Spritzer, Cactus, Summer, Desa, Tinggi, and Pop. They produce mineral water, sparkling water, flavored water, and distilled water. Spritzer is also the market leader in Malaysia. They operate three processing plants and produce about 750 million liters per year. One of their premium product is S-List, which has higher silica and balanced pH, and it is an export to the UK and to the Netherlands. And lastly, Spritzer focus on sustainability by using plant-based bottle and renewable material. So next, the company we look at is Fraser and Neff Holding Berhad, or better known as FNS. FNS was established in 1883, which made it one of the oldest food and beverage company in Malaysia. The company has been operating for more than 141 years, and it is a Sharia compliant company listed on Bursa Malaysia. In terms of business size, FNN record an annual turnover of around RM5 billion and employs over 3,700 employees. FNN is also a subsidiary of Fraser and Neff Limited. For product and market presence, FNN is involved in the manufacturing and marketing of beverage and dairy products. The company owns more than 13 30 brand across 14 product category. Some of its popular brand include 100 Plus, FNS, Season, Nutrisoy, and Ice Mountain. FNN is also a market leader in condensed and evaporated milk. The company operates in Malaysia, Thailand, Brunei, and Indochina, and run 13 manufacturing plants that use modern technology. Overall, FNN maintains a strong distribution network across the region, which supports its long-term growth.
Turning to our horizon analysis for 2022 through 2024, Spritzer financial health remains exceptionally strong. Our liquidity ratios show a consistent upward trend with a current ratio of 2.33 and a quick ratio of 1.88 in 2024. We are well above industry threshold, proving we can easily meet short-term obligations without relying on inventory. Most impressively, we've seen a massive shift in our average collection period. We've slashed it from 62 days in 2022 to just 21 days today. This drastic improvement highlights our tighter credit controls and significantly better cash flow management. Overall, Spritzer is in a highly solvent and efficient position for the year ahead. Okay, moving to our operational efficiency and leverage. Since 2022, we have seen a significant transformation in how we manage assets. Account receivable turnover surged from 5.97 times to a strong 17.79 times in 2024, reflecting much faster customer payments. Simultaneously, inventory turnover has optimized to 6.84 times, showing improved stock control. Regarding leverage, our debt ratio has climbed slightly to 24.6% as we utilize debt for expansion. However, with an interest coverage ratio of 32.74 times, we maintain an ample cushion to service our obligation while pursuing growth. Spritzer's operational efficiency has improved significantly with customer payment and inventory turnover seeing major gains since 2022. In 2024, total assets turnover rose to 0.75, helping drive revenue to a record 579 million ringgit. We have strategically utilized debt for expansion, reaching a 24.6% debt ratio while maintaining a healthy interest coverage of 32.74 times. Ultimately, our 56% net profit growth comes from Spritzer's strong market position and operational success. Spritzer financial performance through 2024 show exceptional strength. The company maintains high liquidity with a current ratio of 2.33 and a collection period that was slashed to just 21 days. Operationally, revenue reached a record 579 million ringgit, driven by a 65% surge in net profit, while the debt ratio increased to 24.6% to fund expansion. A robust interest coverage of 32.74 times ensures long-term stability. Ultimately, the data highlights Spritzer's successful optimization of both profitability, margins, and assets management. Thank you.
Finance current ratio remained strong from 2022 to 2024. In 2022, 2.67 showing a good ability to pay a current liability, and 2023 increased to 2.95, indicating high liquidity, and in 2024 slightly decreased to 2.81 but still stable. Overall, FNN has a strong short-term financial position. FNN quick ratio is improving, increased from 1.59 in 2022 to 0.03 in 2023, and in 2024 slightly high at 2.05. This show FNN can pay short-term liability without inventory. FNN average collection period improved overall in 2020 to 71 days, relatively long, but in 2023 dropped to 52 days, showing a better receivable management, and in 2024 slightly increased to 59 days but still acceptable. FNN receivable turnover improved overall in 2022, 5.16 times. In 2023 increased to 7.01 times, showing a faster collection, and in 2024 slightly dropped to 6.15 times but still reasonable. Overall, FNN maintained efficient receivable management. FNN inventory turnover show an upward trend. In 2022, 3.66 times, and in 2023 increased to 4.67 times, and in 2024 future increased to 4.83 times. This show improved inventory management and faster stock movement. FNN debt ratio shows significant fluctuation. In 2022, 0.37, indicating a low financial risk. In 2023, peaked to 1.57, and in 2024 dropped to 0.34, reflecting a strong recovery. Overall, FNN maintained a conservative and stable financial structure. FNN interest coverage ratio is strong and improving. In 2022, 12.69 times, and in 2023 increased to 17.5 times, and in 2024 future improved to 19.53 times. This shows FNN can easily cover interest expenses with operation profit. FNN total asset turnover show improvement in 2022, 0.77 times, moderated efficiency, and in 2023 increased to 0.98 times, better asset utilization, and in 2024 slightly decreased to 0.96 times, still stable. Overall, FNN used its asset efficiency to generate sale. FNN gross profit margin show a strong upward trend in 2022, 22.26%, and increase in 2023 to 28.70%, and 2024 rose future to 31.48%. This reflect better cost control and stronger profitability. FNN operating profit margin is improved in 2022, 10.42%, and increased in 2023 to 12.86%, and 2024 rose to 13.53%, show a stronger cost control and operation efficiency. FNN net profit margin improved overall in 2022, 9.08%, and increased in 2023 to 10.80%, and slightly decreased in 2024 to 10.16%. Overall, FNN remain profitable and financially strong. FNN return on assets show a strong performance in 2022, 7.00%, and increased in 2023 to 10.60%, and in 2024 slightly decreased to 9.74%. Overall, FNN still use its asset efficiency to generate profit. FNN return on equity show a strong performance in 2022, 11.06%, and increased in 2023 to 16.20%, and slightly decreased in 2024 to 14.86%. Overall, FNN continued to deliver good return to shareholders. F&N price earning ratio fluctuated in 2022, 42.4 times high valuation, and in 2023 dropped to 20.5 times, and in 2024 rose to 43.4 times high market expectation.
A. Current ratio. Spritzer Berhad ratio was 2.12 times at 2022, decreased to 2.03 times at 2023, and increased to 2.33 times in 2024. F&N Holdings Berhad current ratio increased from 2.67 times at 2022 to 2.95 times at 2023 before slightly decreased to 2.81 times at 2024. B. Quick ratio. Spritzer Berhad the quick ratio increased from 1.60 times at 2020 to 1.161 times at 2023 and 1.88 times at 2023. F&N Holdings Berhad ratio steadily from 1.59 times at 2022 to 2.03 times at 2023 and 2.05 times at 2024. C. Average collection period. The average collection period declined from 62 days at 2022 to 17 days at 2023, then increased slightly to 21 days at 2024. F&N Holding Berhad the period improved from 71 days at 2023 to 52 days at 2023 before rising to 59 days at 2024. The account receivable turnover. Spritzer Berhad ratio increased significantly from 5.97 times at 2022 to 21.59 times at 2023, then decreased to 17.79 times at 2024. F&N Holdings Berhad the ratio from 5.16 times at 2022 to 17.01 times at 2023 before declining to 6.15 times at 2024. E. Inventory turnover. Spritzer Berhad improved from 4.03 times at 2022 to 6.76 times at 2023 and 6.84 times at 2024. F&N Holdings Berhad the ratio increased consistently from 3.66 times at 2022 to 4.67 times at 2023 and 4.83 times at 2024. Analysis capital structure. A. Debt ratio. Spritzer Berhad debt ratio increased from 17% at 2022 to 3.4% at 2023 and to 4.6% at 2024. F&N Holding Berhad the debt ratio changed from 0.37% at 2022 to 1.53% at 2023 and 0.34% at 2024. B. Interest coverage ratio. Spritzer Berhad ratio declined from 53.7 times at 2022 to 41.9 times at 2023 and 32.74 times at 2024. F&N Holding Berhad's ratio improved from 12.69 times at 2022 to 17.5 times at 2023 and 19.53 times at 2024.
Vertical analysis for total assets turnover. This direct comparison makes it clear that F&N manage assets more efficient than Spritzer, and this in turn signals that F&N is in a stronger position to maximize asset utilization to generate returns. For gross profit margin, this proves that Spritzer has better cost strength and higher markup levels than its competitors, although both are on a recovery trend in 2024. Net operating profit margin. While F&N company also showed an increase, Spritzer's rate of increase was more aggressive and was at a stronger operating level, proving Spritzer is more efficient in generating profits from core operating activities. For net profit margin, although the difference is small, Spritzer is more consistent and maintains a stable net profit compared to F&N company, which experienced instability in 2024, possibly due to production costs or reduced market demand. Next, return on assets. Although Spritzer recorded a high in 2022, F&N company was more consistent and maintained a better return on assets in 2024, indicating a more efficient use of assets in generating income. Last, return on equity. The high value shows that F&N companies' leverage and capital management strategy is more aggressive and effective, thus providing greater returns to shareholders compared to Spritzer. Therefore, from the perspective of shareholder investment power, F&N company is more attractive. Price-earnings ratio. F&N's price-earning ratio is more consistent and much higher, indicating that market confidence is more in favor of F&N than Spritzer.
So for the recommendation, Spritzer Berhad maintain a balanced capital structure by controlling the level of debt to reduce future financial risks, improve asset utilization, especially from recent investment in production facilities through better planning and demand forecasting, focus on higher margin premium product to enhance profitability, strengthen receivable management to ensure stable and sustainable cash flows. For Fraser and Nif Holding Berhad FNN, adopt a more consistent, stable financing strategy to manage fluctuation in debt ratio, ensure asset growth is supported by sustainable long-term funding sources, continue improving inventory management and supply chain efficiency to reduce holding costs and enhance cash flow.
I'm going to explain the suggested source of fund for business expansion for Spritzer Berhad and Fraser and Nif Holdings, or better known as FNS. First, we have debt financing. For Spritzer, the company has a low debt ratio and high interest coverage, so it's safe to take loan for short or medium-term projects. For FNN, debt can be used for long-term projects, but it must be used efficiently. Next, equity financing. This means raising funds by issuing new shares. For FNN, this is suitable for large expansion because the company has consistent profit and a positive market perception. But they need to be careful because issuing new shares can reduce existing ownership. Finally, lastly, internal financing, which use the company owns profit. Example, for Spritzer, this is good for gradual expansion, like product improvement or marketing activities. FNN can also use internal financing for smaller projects.
For the conclusion, Spritzer Berhad shows consistently strong liquidity and improving profitability, demonstrate effective short-term financial management and operational efficiency, although debt usage has increased gradually. A high interest coverage ratio indicates strong debt servicing capability. Improvement in asset turnover and profit margin reflect efficient resources utilization and cost control. Overall, Spritzer is financially sound and well positioned for sustainable growth with prudent debt management. For Fraser and Nif Holding Berhad FNN exhibit strong profitability, efficiency, asset utilization, and solid liquidity. Experience fluctuation in debt ratio, particularly in 2023, but maintains low financial risk due to strong interest coverage. Consistent improvement in profit margin reflect effective cost control, economies of scale, and strong brand positioning, able to generate stable shareholder return to maintain investor confidence.